To our next discussion now, the interest rate outlook in the Sub-Saharan Africa with global inflation on the rise, stoked by rising energy prices and the war in Ukraine. Central bankers all around the world are raising rates to curtail rising prices. And the African central bankers from Ghana, South Africa, Nigeria have raised rates recently. Well, to get an outlook, we have Matt Kindigan now, practice lead, Sub-Saharan Africa, front of you. Join us right here. Great to have you on the program.
Hi, thanks for having me on the show today.
Right. So, which countries are likely to, see more interest rate hikes, most rapidly in Africa?
Yeah, so as you mentioned in your introduction, we've already seen interest rate hikes recently by South Africa, very notably by Ghana, a 250 basis point hike recently. So we do expect to see South Africa and Ghana continue to pursue interest rate hikes, and this is for a number of reasons. In South Africa's case, interest rates are still very low by historical standards. They remain below pre-pandemic levels, and the central bank has made it very clear that it is willing to continue to tighten monetary policy to help curtail inflation, but also stabilize the value of the rand. In our view, South Africa's economic growth prospects are more upbeat now than they were 6 months ago. And this is because of very high global commodity prices, which are driving exports. So this does give the central bank, the South African Reserve Bank, slightly more scope to raise interest rates more aggressively than in other sub-Saharan African markets. Inflation is also expected to exceed the upper target limit of 6% this year. It'll likely peak above 10% year on year in in Q4 this year. And this is another reason for very aggressive interest rate hikes we're expecting. In Ghana's case, really, it's down to the fiscal pressures and the very significant downward pressure we're seeing on the currency, the CD, at the moment. So we do expect the central bank in Ghana to continue to pursue quite substantial interest rate hikes over the next couple of months. A few other markets are unlikely to see such rapid increases in interest rates. For example, the Kenyan central bank is most likely going to tolerate higher inflation longer to ensure that the economy continues to grow strongly. And the Angolan central bank is likely to keep interest rates relatively low or where they are for the foreseeable future. And this is because inflation is actually falling in Angola, one of the few countries where that is happening. And also the Kwanza has been the best performing currency against the dollar this year. So it is very strong at the moment. So a slightly different approach for those markets.
Quite interesting. And, we've seen the Fed, raise rates and the dollar index actually get stronger. But what does this mean for, the currency outlook across sub-Saharan Africa?
Yeah, so this is the hot question at the moment. For the markets where we're going to see high interest rates, especially in South Africa's case, there's no doubt that the higher interest rate in South Africa, or higher interest rates that are likely to come over the rest of the year, will support the value of the rand and could actually result in quite significant volatility, because we have seen the rand lose value in response to increasing investor anxiety around the global economic outlook. It's worth remembering that the rand is often considered a bit of a bellwether for sentiment towards, or investor sentiment towards emerging markets. So higher interest rates will prevent the rand from depreciating to a certain extent against the dollar. In Ghana's case, however, we don't think it will be as effective, and this is partly because despite the very significant interest rate hikes in March, we've already seen the CD lose some value. For markets where interest rates are going to remain a bit lower, we do expect to see continued downward pressure on currencies, for example, in markets like Ethiopia and Kenya.
Quite interesting. But will higher interest rates affect, economic growth prospects in the region?
Yes, so currencies are only one issue affected by interest rates. We do expect to see some impact from high interest rates, some negative impact on from higher interest rates on economic growth in sub-Saharan Africa. And this is because since the start of the pandemic, we've actually seen very strong credit growth across sub-Saharan Africa. Kenya, South Africa, Ghana, even Nigeria has seen very healthy credit growth from commercial banks to the private sector. And this has supported very substantial expansions in activity in several industries, especially manufacturing, ICT, and in some cases, consumer goods, especially premium consumer goods. Now, with interest rates rising and inflation rising as well, commercial banks will increase their interest rates, and this could slow down the very substantial growth that we've seen in these industries, and as a result, also have a negative impact on overall levels of GDP growth. In our view, at the moment, it's unlikely to completely derail growth, but we could see a bit of a softening of activity in some of these key growth-driving industries over the next couple of months.
Right. All right, Matt. Let's hope inflation peaks, at some point, so we can get some normalcy with these economies. Thank you so much, Matt Kendiga, practice lead at Frontier View, right there in Sub-Saharan Africa. Thank you so much.
Thanks very much.